All right. All right. This is Regions Financial Q4 2022 earnings call summary. And pretty straightforward. They did add four new businesses to their portfolio, mostly consumer and real estate um, loans. There was also some um, capital market stuff dealing with tech companies and advising tech companies on how to go public and how to raise funds and so forth. So that's going to be a small part of the portfolio right now, but adding the loans to their portfolio has been really good. I think they said they paid $1.3 billion for those four companies, and so without doing any kind of math, that seems like a pretty reasonable price to pay for roughly, $3 to $4 billion in loans that they're now going to be servicing and receiving interest on. The biggest thing on this earnings call was what they've done to hedge against interest rate hikes. What they did in the previous quarter, they basically sold out of all of their hedging contracts, right? And so they entered into new hedging contracts that are going to pay them if and when interest rates rise. And so you're looking at a graphic here that shows that for every 0.25% hike increase, they're going to be making something like 60 to 80 million dollars. Now, the story is that we're going to see possibly four rate hikes. Totaling about 1% over the year of 2022. Whether or not that happens, we don't know. But for every roughly 0.25% interest increase, they're going to definitely be making some money. So that's a really great thing. They're going to grow their loan portfolio 3 to 4%. They're saying they're still looking at trying to bring down costs. They did add a lot more employees due to their new acquisitions, but as long as those acquisitions can maintain and grow, then I think we'll continue to see some profit increase. One of the few things that I do expect to change from Q3 is that the provisions, which didn't get discussed at all in the earnings call, will more than likely go up. And again, that's just because of the new companies that they have coming on. They're going to have to rate that stuff. They're going to have to relook at it and see kind of what they need to put in place and how much cash they have to have on the books to take care of any sort of loans that are not performing well. Overall, like I said, great company in a great place in the country, I think, and so a lot of their acquisitions too have clients in other parts of the country. So they're looking at possibly trying to expand their client base there as well, meaning that those customers that are getting those real estate loans and things of that nature, maybe in California or Nevada, right, will become Regions Bank customers, even though they're in a location in their home state, they can still bank online. So that's what they're looking for. Either way, like I said, they are growing the balance sheet. Um, of course, the money that they're making from non-sufficient funds is going to continue to come down, but we saw that over the last 3 years in our last valuation, so it's nothing new there. But I do maintain my current outlook, which is 24.89 to 30.13 for the year of 2022. They did miss I believe the net profit expectations on this quarter. So the stock price did take a pretty big hit, down, almost 8%. But that's also in line with what the market has done this week as well. So it's to be expected. 22 seems to be support for this particular company. If we can get some options under 22, definitely look into doing that. Otherwise, we're just going to hold tight.